Welcome everyone. Good morning or good afternoon. We're just getting started here with another episode of Daily Rates Live Calculator. And we are a lender and mortgage broker licensed in over 20 states with over 200 MLOs that would be happy to. So we have some of our MLOs here joining us, and as well as our customers out there that are looking to check out today's rates. So what we do every day is we'll check out the general markets and the general rates for all of our standard programs, and then we'll do a deep dive into our topic for today, which will be our asset-based loan programs using our non-QM loans. So if you have any questions while we're going through the presentation here, please drop them in the chat. Any of our team members would be happy to help you and send you a full loan estimate with a full itemized breakdown of all the fees included for any of these quotes. And with that being said, let me go ahead and start today and switch my screen here, and we'll get into today's live rates. A lot of live news there. So what we do every day is we want to check out our 10-year treasury, which is typically the best indicator of rates overall, especially when we're talking about all kinds of different programs, conventional, government, non-QM. When we're talking about many different programs, we want to look at the 10-year treasury to track rates over time. So this is the last 5 days. Thankfully, we've seen a lot of downward momentum here with some of the news. And we always want to put it into perspective here and see that over the last year, we are very near 1-year lows here. So definitely a great time for everybody out there shopping. So don't worry about the day today, even though today's news is good. If it goes up tomorrow, don't worry. We are still at 1-year lows here. Now let's look at today's live rates for all of our standard programs. So here we have our basic scenario, our standard single family home, 500,000 purchase, 300,000 loan amount. That corresponds to 60% loan to value, 760 credit score, 40% debt to income ratio. We use that same scenario so we can compare across all the different loan programs in one shot, not just the standard ones here. Zoom in a little bit more. And first up are conventional options for a primary home under 30-year fixed. Today come in at 5.875 rate, final APR 6.111. Hopefully with today's downward momentum, we see some more downward movement there. And today FHA, if our customer doesn't qualify for conventional, we'll typically want to look at an FHA option, which allows more leniency on credit issues and higher overall debt to income ratios, but does require additional fees for upfront and yearly mortgage insurance. FHA comes in at 5.375 today. Final APR is 6.25. Again, hopefully we see that move down a little bit this afternoon. And our VA programs for eligible vets and active service members and surviving spouses. VA programs are pretty amazing. Rates today come in at 5.25. With the reduced fees here for VA loans, you see the final APR coming in at 5.512, which blows FHA and conventional out of the water. So for our borrowers that are eligible, those programs are amazing. And USDA is only for properties in those USDA eligible areas, those rural areas of the country, and also has income limits. So if our borrower is eligible and the property is eligible, these are great to look at. Rates today for a standard 30-year fixed USDA come in as low as 5.125. Final APR there, 5.779. And we typically want to compare that to our FHA and conventional options. And when we do here, we see the USDA is typically going to be the cheapest option for our borrower. And where we start to use our expertise here at the Mortgage Calculator, we also offer a lot of programs beyond the standard there, the 4 standard that everybody typically offers. We go way above and beyond with our non-QM alt-doc options here as the first option we're looking at for our primary home. These are the options that allow us to do alternative documentation if our customer doesn't qualify with the standard full documentation, tax returns, etc., required for the standard loan programs. We can use bank statements, 1099s, P&Ls, and even asset-related loan programs, which we're going to go over today. So that's where our alt-doc options come in. Final rate today, low as 6% this morning. Final APR, 6.272. So just a touch higher than conventional, which is pretty typical. And we can use our alt-doc options for investment properties as well. Final rates today, 6.125. And final APR there at 6.448 for an investment property option using alternative docs. And we compare that to conventional. Conventional comes in today 6.125 rate as well. Final APR 6.438, just a touch cheaper than our alt-doc options, which is pretty typical. And we always want to look at our DSCR options as well. Those are our options that require no income or employment documentation. We simply use the estimated rents from the rental property here for an investment property to determine a DSCR ratio. If the rental property rents cash flow, okay, the property rents exceed the expenses, that is a ratio of 1 or higher. That's what we use for these scenarios. And we add a 3-year prepayment penalty, which is standard for these options, to get our rates as low as 5.999 today. Final APR 6.222. Amazing. That beats conventional and our alt doc options to do our DSCR. And we can add a 5-year prepay to drop the rate even a touch lower, low as 5.875. Final APR 6.181. Again, blowing conventional out of the water. Absolutely amazing. And we can add no prepayment penalty if our some states don't allow it. Some customers do not prefer it. No problem. Final rate today 6.125. Final APR 6.448. Again, almost identical to conventional and alt doc options, which is pretty amazing. We also have second mortgages, fix and flips, commercial, all kinds of different options here that you can see as you scroll down. If you want to get a full loan estimate, please get with one of our loan officers. They would be happy to send that over, and you can start that just by clicking on the website. But today, let's get into our example. So first off, we want to select an example home. So I just looked in the local area here, found a nice waterfront home here. It does have a jumbo price tag here, 1.4 million, which is great because we're exploring our non-QM programs, which don't have a conventional loan limit. So if we're looking for conventional FHA, those wouldn't necessarily work to get to the high LTVs that we need for this program. So this is a great property to use it as an example for our non-QM asset-based loan programs. So first up here is our non-QM asset-based program to put as low as 10% down payment. So just a few weeks ago, we did a show with asset-based mortgages, and we couldn't get to a 10% down payment. So mortgage markets have opened up, and we do have some options for 10% down for asset-related, which is pretty amazing. And this is when we're doing a primary home, of course. And remember, non-QM never has PMI, so there is no PMI included here. And of course, if you put 20% down, the rates will be better. So we definitely have a ton of options for the standard 20% down, but the 10% down is pretty unique. Now, this program does require 1 million in assets, and it simply takes that assets divided by 84 to determine a monthly income figure. You can see here the eligible assets are obviously cash, stocks are taken at 70%, same with retirements, etc. So they do a little bit of a formula there, and then they simply divide it by 84 to arrive at a monthly income figure. Pretty simple calculation method. When we get into these asset-related programs, there's dozens of different options and ways to calculate it. Some use 60, some use 84. Some have a minimum amount of assets, such as this program. We require 1 million minimum. Some do not. So these programs are pretty unique. But let's get into the rates here. So to put 10% down, we can get rates as low as 7.5. Pretty amazing for a cost of 2.375 discount points of cost there. And we have a par rate for this program at 8.5% rate or 0% in discount points cost. You can see here that was just to put 10% down on a $1.4 million property. And you see all the other assumptions here are the same as we do before, 90% LTV. We use that 760 FICO credit score. So great option here for our borrowers that are looking to put low down payments on a primary home and need to use their assets there, don't have any standard income. Now, we can also do this for a second home or vacation property, especially when we're looking at those waterfront properties in Florida. A lot of customers are requesting those as a second home or vacation home. And we can do that. Here, we just have to edit it to the more standard 15% down payment. And that's because we're doing a second home or vacation home here. And that's for that exact property we were looking at before. And this is the same exact program. So again, if we put 20% down, the rates are going to be a little bit better, but we always want to take it to the max. And this one requires 1 million in assets and takes those figures divided by 84. So same exact program, just switching the occupancy here. And you see the rates as low as 7% here for 2.25 discount points and costs, and 7.75 costing 0.125 discount points. These rates are a little bit lower because we're putting more down payment, but there are no options to do a second home at 10% down. So we do have to put more down payment down here. So the total LTV was 85, and again, all the assumptions are the same. And now if our customer is looking to purchase this amazing property as an investment, So we do have options, pretty amazing. We still have 15% down payment options to use our asset-based income here for an investment property. And again, it's the same exact program. So we have a bunch of different variations. This is the one that has the more lenient LTVs. That is probably because it does require a minimum amount of assets and does have a pretty high factor here of 84. We have other programs that don't require 1 million and use a factor of 60, and some even use a factor of 36 there. So all kinds of different ways to do this program. It's pretty cool. And today, this option is 7% rate, costing 3.25 discount points in costs, and 7.625 rate, costing 1.25 as the lowest cost option there. And that's to put a pretty amazing 15% down payment on an investment property for that 85% LTV. And notice we did switch this to investment property. So some amazing options there to put very low down payments. That pretty amazing house there for all the different occupancy types. So again, if you have any questions or want to get a full breakdown on those scenarios, please get with one of our team members. Any of our licensed loan officers will be happy to help you out and send you the full itemized loan estimate. Don't see any questions in our chat here today from the live stream. Again, go ahead and go to our website, mortgagecalculator.com. We'd be happy to send a full quote with everything we looked at today. Thanks everybody for tuning in, and we'll be back next week here with another episode of Daily Rates Live.